We are in the midst of earnings season when companies are reporting their earnings for the last quarter or perhaps the year, reports that can be a big indicator of how well a company is doing. And joining us to talk about that is Ernie Burns with Burns Estate Planning. Good morning.
Hey, good morning.
Before we get to that, today's the big day when the Federal Reserve will theoretically raise interest rates. Maybe a quarter of a point is what people are looking for.
Wall Street's projecting 0.25%, but what's more important is his comments after. If he's hawkish,
Jerome Powell, the Fed chair.
Yes, sir. If he's hawkish about possibly raising rates again after, depending on readings of the market, then the markets will take it very negative.
Do you think the market has priced in right now a pause? They really kind of think there's a good chance that this interest rate hike, money getting more expensive, will stop?
I think after yesterday's tumble, I think the market's priced in 0.25% today. I don't think they've priced in a pause yet. However, it should be a pause. To be responsible, it should be a pause, especially as aggressive as he's been on raising interest rates.
All right, we will look for that. That'll be a big point of discussion today and tomorrow. This is a time when companies are posting their quarterly and sometimes yearly earnings. It's a day to boast for companies, or a day to kind of take a day of reckoning almost?
Yeah, if you're listed on in New York Stock Exchange as a tradable stock, company-wise, you have to report every quarter. And every quarter you're going to show good earnings, which also could show a big boost in your stock, or you're going to show poor earnings. You know, Chevron Exxon reported great earnings last week. American Airlines missed earnings. Uber reported great earnings yesterday. Today, Estee Lauder is about to report earnings. Marriott reported yesterday great earnings. If they're making good earnings, the stock's going to usually project upward.
Although they do guidance too about what they're looking for in the future,
right.
And that can affect things. What, as an investor, what should somebody look for?
You need to look at earnings is one big thing, but also future projections. And is it monetary? In other words, can you use this in the future? Do you use this product? Are you liking this company? What does it stand for in a sense of what your personal natures are? And you have to like a company to invest in it. The old days where tobacco and alcohol those type of sin stocks, people are not really looking at that anymore. They're looking at something, if you're a smart investor, is if it's profitable, if it's manageable, and is it reoccurring, like Apple, Microsoft, Google, reoccurring, but they don't have any actual assets, but their reoccurring revenues are always coming in. Those type of projections and those type of companies are always going to make money.
Is there, for some companies, what do you make of the criticism sometimes that because they have to, and I understand why they report quarterly, but often the criticism is a CEO gets more concerned about his short term and he's not necessarily looking out to what's really in the long-term interest of a company?
Well, if he's doing that, he won't be CEO very long. I'll give you an example. Starbucks reported great earnings yesterday, but the projections for future earnings were not increasing, so the stock shot up and then it shot right back down. So the projections for future earnings or has to be inside that comment when they're basically showing what they made for the last quarter.
And they have analysts there that are grilling them who know
Yes.
theoretically about the industry, that sort of thing.
Absolutely. If they're meeting Wall Street production and expectations, they're fine.
All right.
Yep.
Thanks for that, Ernie Burns, and we'll look to see what the Fed does on interest rates.
Yeah, we will.